if you're a subscriber to this channel, you've probably seen a trading plan that I posted a few days back, which I was trying to use on a $20 account. So after I posted that, I decided also to show you the strategy that I'm going to be using for that small account. So what is it that you look for in a strategy for a small account? So first thing that you need to look for is the risk to reward ratio. So a small account, as I said in that video, you must watch it if you didn't watch it. I said when you're trading a small account, you have a few chances of making money and you have big chances of losing it, because you only have maybe 5 or 4 chances to grow that small account, right? So with that being said, you need to understand that you need a big risk to reward ratio, which means if you get one trade correct, it's gonna cover up for all the losses that you might occur in the next few trades, right? So you need to make sure that your strategy gives you a big risk to reward ratio. You don't need to look for the winning ratio more than the risk to reward ratio in a small account, right? Because there are strategies like the Bollinger Bands strategy. When you trade when the market touches the upper Bollinger Bands or the lower Bollinger Bands, but that strategy, you have a high win rate, but the risk to reward ratio is very bad for that strategy. That is why it's not profitable, but most people think it's profitable because of the winning ratio. So you need to understand that risk to reward ratio is more important in a small account because your chances are few. Then the number 2 is the time frame. If you look for the good time frame in a strategy, in a small account, you always need to look for a time frame which is maybe 5 minutes time frame or 1 minute time frame. Why? Because you want your stop loss to be closer to the entry. And then the next thing is you need to for frequency of setups, right? If you're trading a small account, you want to get like 3 or 4 trades per day, right? You need to get like 3 or 4 trades per day. So you need to look into your strategy and say, okay, how many setups can I get per day with this strategy? It's something that you need to understand that you need if you're trying to grow a small account. And then you need to look at the stop loss gap. So the stop loss gap is saying, okay, if I end at this point, where is my stop loss gonna be? Where is my take profit is gonna be? So if your strategy gives you a setup where your stop loss needs to be very away from the entry, then that's not a good strategy, because you want to be risking small and making more in a small account. Now let me show you the strategy step by step. So before we move forward, guys, I almost forgot, if you are watching this video and you go to the comments below, do not WhatsApp anyone who tells you to WhatsApp them in the comments, right? I will always put my links in the description. Do not send me a WhatsApp message. I don't use WhatsApp, and I don't have Facebook groups. I only have this channel and a Telegram channel. If you want to communicate with me, I will put my Telegram link in the description. Do not go through the comments. There is a lot of scammers out there who are trying to make money through my name and are taking money from you. I don't message you in private. I have never started a conversation with anyone of my subscribers. I don't message you. You are the one who ask the questions, and then I answer after you ask the questions. So I will never direct message you. So you need to make sure that you don't fall for those scammers. Now let's go into the chart and I'll show you the strategy itself. Now this is volatility 10 index on a 5-minute time frame. So my strategy is simple. I'm trying to get big moves. So for me to get big moves, the best way is look for reversals, right? So how do I see a reversal? A reversal, the way I see a reversal is I draw a trend line which connects recent swing points. So we have this point right here, this point right here, this point right here, this point right here, and these points here, they validate this trend line. And then when the market breaks past the trend line, I know that it's probably the time for the market to move in the other direction. And this works very well in synthetic indices more than in currencies. To be honest with you, the synthetic indices, they move with the same volatility each and every day. So your chances of making money here is more, because all you need is to draw a trend line which connects major swing levels, and when it breaks, you are going to be buying and then expecting prices to go up. So in this case right here, I would buy at this point. So you need to understand this. There is some points where you get a break and a retest, so you need to choose on your own. Do you want to wait for retest, or do you want to just buy the breakout? For me, I think buying the breakout is a good point, because once I buy the breakout, if the pullback comes, it might come and take me out, but sometimes the pullback will never come. So what I do is I will just once I see a break of the entry, I will buy at this point right here, and then I will put my stop loss 2 candles below. So this candle here, which is the breakout candle, in this one, so I'll put my stop loss right here. Just want to calculate 2 candles below, and then I put my stop loss right there, and then my take profit should be 3 times the risk, right? So if I risk $3 here, if this is $3, this should be $9. So if I'm risking $3 to make $9, then that's 1 to 3 risk to reward ratio, right? So this is the strategy, and let me show you some examples again, right? So all you need to understand here is you need to look for breaks of trend lines, right? So if you manage to be able to draw a trend line, so a trend line also only comes with 3 touches or more. So for you to validate your trend line for the trend line break strategy, you want to see the first touch, the second touch, the third touch, and then on the fourth touch here, you can see that the market breaks the trend line here. So if I was entering at this point right here, let's say I was entering at this point right here, a sale, I will calculate 2 candles, one, this one here, the breakout candle, and the next one, and I'll put my stop loss right there, and I'll put my take profits 3 times at the risk right here. So in this case, I don't know what happened. Okay, the market kept going down, and when it was going down, it created another trend line here, which I showed you, right? So as I said, this works very well in synthetic indices, especially volatility 10, volatility 75, because these volatility indices, they move in the same manner each and every day, right? So there is no like the news to disturb this market. You can see here 1, 2, 3, 4 touches, and then on the fourth touch we have the break. So I'll put my entry here, calculate this first candle, the second one here, and I'll put my stop loss there, and then my take profits 3 to 1 my risk right there. So you need to understand that for you to get frequency trading here, to get more entries, you need to be looking at the market and only marking swing levels. So you can go to the lower time frame, let's say to the 1 minute time frame, and then the 1 minute time frame is okay, but also it has a lot of noise. So you need to be careful. You need to be able to to draw these trend lines in real time, because it's easier. What I'm doing right now, it's easy to draw because I'm drawing trend lines on the market that already did what we are talking about. So if you are looking at this in real time, it's challenging. You need to try and make sure that you practice and be able to draw these trend lines in real time. So in this case, I would say at this point, calculate 1, 2, and I'll put my stop loss right there, and then my reward should be 3 times the risk, maybe at this point right here. And in this case, I think this was a losing trade because I saw the market going up right there. And then again here we got another trend line right there, which was a winning trade, and then we got another trend line right there, which was going to be a winning trade. We have also another trend line right there, which was also a winning trade. And also, so this is a strategy that I think it works very, very well on 5 minute time frame, 1 minute time frame, and it only uses trend lines, and there is no indicators for you to wait for. There's all you need is to be able to see prices with naked eyes. So this is the strategy that we are going to be using for this small account. Tell me what you are thinking about the strategy in the comments below. If you like this video, if you think this video was helpful, make sure you click that like button, and I'll see you in the next video.